Hi everyone, welcome back to the channel. This Friday, the non-farm payroll report just came out, and the market reaction was mixed. Some traders look the weaker job data as a good sign, meaning the Fed is almost guaranteed to cut rates in September, maybe by 25 or even 50 basis points. But others saw it as a warning that the labor market is weakening faster than expected, raising the risk of a recession. So at first, stock market and crypto market popped higher on the report, but after a bit of digesting, the optimism faded out and the market pulled back again. One day before, on Thursday, we also had the ADP private payroll report. It shows that the US private employer only added 54,000 jobs in August, compared to the analyst expectation of 70,000. The market immediately started pricing in the labor market recession risk. That's why we saw crypto selling off sharply that morning. Bitcoin, Ethereum, and altcoins all dropped together. Now, personally, I don't think the ADP report was a disaster. For example, the annual pay growth came in at 4.4%, while the inflation is around 3%. That's totally reasonable. The only negative surprise was the lower than expected job creation. Everything else looks fairly normal. That's why I feel the crypto market was overreacted. The stock market actually went up on the same data, while crypto downed. My view is that the market maker probably used the job headlines as an excuse to shake out the retail investors, especially since the September is historically one of the most volatile months of the year. Alright, so that's about the job reports. And now let's jump back into Cardano chart. I think Cardano is sitting at a very crucial level right now. If you look at the chart, ADA is still stuck in a downward channel and has been consolidating with the range for a while. A day before the ADP job report, when it hit 84 cents, it really looked like a breakout was incoming. But instead, the price got pushed back down. That's fine. The market loves to test our patience again. Right now, Cardano is just ranging inside the channel again. Let's use the Fibonacci chart to take a look at the short-term Cardano trend. I really love to use Fibonacci for both short-term and long-term analysis. It helps me a ton to get a basic idea on the potential support and resistance lines. So let's look at this. From the June local low to the August local high, let's draw it here. The Fibonacci retracement shows that ADA first had a run up to the 0.236 level and then got a pullback. And it retraced into the 0.6 golden pocket. Then it rallied again as a second wave, and now it is in another pullback. The important part is Cardano has been forming higher lows. In June here, August here, and now September. This is a textbook sign of an uptrend. If ADA can rebound above the August low and break out of this downward channel, this will be a very strong breakout signal. In that case, the next big target is, let's see here, if we draw a trend line here and move it up right here, the price of ADA could be up to $1 and $1.10 range. This is not just a technical resistance level, it could also be the point where Cardano kicks off a real altcoin season rally. Next, let's look at the Cardano potential move in the coming days and weeks. Right now, ADA is trading between the 0.382 and the 0.5 Fibonacci zones. If it can break out in the next couple of weeks, that's the best scenario. However, it is also possible to continue the downtrend. If it keeps sliding, the possible support is around 0.5 level. It's around 75 cents to 76 cents. We can see we have two resistance lines at the price range previously, here and here. So now the price range could become a support. So if Cardano keeps sliding down, the 75 cents and 76 cent price range will be the next one we want to keep an eye on. So in the worst scenario, it could be go deeper down to the 0.618 level. However, a strong bounce from either of these zones could set a new local high and keeps the uptrend intact. Okay, so let's move to the Cardano's daily chart. On the daily chart, we just got a very interesting signal. The 100-day moving average, which is the red line, it just crossed above the blue line, 200-day moving average. If we look at the price movement, Cardano just had a quick rally there. Let's go to the early point. On December 2024, we can also see the 100-day MA across the 200-day MA, and we can see ADA had the same bull run. The next previous one will be the bear market, and we are going to skip the one in the bear market, as you know, it reacts differently in the bear market. Okay, then in the last cycle, in December 2023, let's see these two lines. When the 100-day moving average across the 200 moving average, ADA went on a major bull run. And during the bull run, the 100-day moving average never crossed down to the 200-day moving average. So what does this tell us? If, let's say, now is the start of the altcoin season, this crossover could mean that the Cardano bull market has already started, at least for Cardano, even if the price action doesn't look that explosive yet. So if we see these two moving averages start to apart, I think that implies to the explosion for Cardano and the whole altcoin market. If the following 4 months are altcoin season, then the 100-day moving average will move far away from 200-day moving average, and both will keep going up. So for the coming 1 to 2 months, this indicator is something that we need to watch closely. Okay, so this is my Cardano short-term analysis. To summarize it, in the short term, Cardano is still consolidating inside a downtrend channel. Either it breaks out soon or it retests the lower support again. But from a bigger picture view, if we zoom out, the setup looks bullish, with a higher lows and a golden cross already in play. So that's my breakdown for today. If you found this helpful, don't forget to click the like button and subscribe to my channel. It really helps me a ton. Alright, that's it for today. Thank you for watching, and I will see you guys in the next one. Bye bye.